Yeah, I hope people will meet us there too. So I hope as we proceed, people will join us. So let's just start. Let's start briefly. Let's just start briefly on market structure. We all know what is market structure, right? Market structure in a simple definition. I don't really like writing, but because of this, I'll just try my best to put down some jotting. In a simple definition, market structure, in a very simple definition, is the direction and I hope you guys can see the screen. I hope you guys can see my screen. Let me zoom in. In a very simple definition, market structure is the direction. We are just joining. Welcome, you're welcome. Is the direction and behavior of the market. That's just what market structure is the direction and behavior of the price or of the market, anyone you want to call it. That's just what market structure is in a very simple layman way. And also market structure follows a pattern. Market structure follows a pattern in the sense that I'm purposely doing this class so that I can post it for newbies and also some advanced traders that are not here, that they are still finding it difficult when it comes to liquidity and some stuff. And market structure follow a pattern. They are in three types. We have market structure follow a pattern which are in three types, we have uptrend or upward. We have upward move, we have downward move, and we have consolidation. We have consolidation or consolidating move. And have it in mind this, sorry guys, change my distance. Okay, have it in mind this move, this uptrend and downtrend, this upward move and downward move, they are trending markets. They are trending markets. Yeah, this upward move and downward move, they are trending markets, and this consolidating move is called range. It's called range markets or ranging market, any one of it. And now this is just it about market structure. And what did I mean by upward move and downward move? Upward move in the sense that if market is going like this, I'll be using the textbook version to explain first, like the basic textbook version. If you are just joining, you're welcome. Please double tap on your screen and like. The normal textbook version of upward move is market move upward like this. You are still going to get there and explain why this move upward, and this is upward move. Let me write it down. Upward move. I'm not sure if I'll be doing analysis today, but I'll try to do one or two after this class, after this lesson. And this is downward move. Price do what? Start breaking structure to the downside. This is downward move. This is downward move. So you can see these two move. Sorry guys, these two moves, they are what? They are the trending market. If you are just joining, you are welcome. You can double tap on your screen for more likes. These two moves that I just tapped, that I circle, this upward move and downward move, they are the trending markets. And if you have, and what is consolidating move or ranging market? It's just, in a simple term, is when market did not have a clear direction, market did not break through a particular high and a particular low, in the sense that if you have something like this, market is doing something like this. If you are just joining, you're welcome. Don't worry, I'll try to be fast on this and we'll do some analysis. When market is just change to okay. When market is just doing something like this is a particular high, and mostly these ranging markets happen during Tokyo section. It always happen during Tokyo section, mostly when you have this high here, this Tokyo high and Tokyo low, and price did not break none of them, either the high or the low. This is called a ranging market. And sometimes some traders will tell you a ranging market is dangerous to trade, which is true. Ranging market is dangerous to trade sometimes, but there's a way you do trade it, like the way you do go about it. But when we get to the explanation there, we're going to trash it out. If you are just joining, you're welcome. Please follow me, tap on your screen to give me more likes. That's the only thing I just need from you guys. So now let's talk about liquidity. Now I just still want to explain briefly on them. We have already explained briefly on market structure. So now let's talk about liquidity. What is liquidity? Now the lesson we are having is market structure and liquidity. So what is liquidity? Liquidity, in a very simple layman way, not to bother us with too much talk, liquidity is where money sits, or where pending orders are, where money sits or where pending orders are. Where money sits, in the sense that, let me use market structure, this market structure now to explain. Let's say we are, I just want to brief this. I'm still going to explain it broad, don't get confused. I'm just doing like introduction to them. So when we have an uptrend like this, initially markets break, and this is what will bring us to advanced market structure when we get there. If you are just joining, thanks for joining. Please tap on your screen. This is a break of structure to the upside, right? So where money sits or where pending order means that some traders that are not aware of advanced market structure may want to be looking for entry, their point of interest around this zone here, since there's already a break of structure, the market break structure to the upside. So, and they want to be putting their stop loss maybe a little bit below here or exactly below here. And what will market do? Because they are pending orders here, there are people stop loss around this level here, market will just do what? Market will just first push up to deceive them and then come down to take out those pending order before moving in the proper direction. That's just simple thing about liquidity. But when we get to advanced market structure, we are going to trash it out in a very more explanatory way that you're going to understand it here. So now that now brings us to this class. We are from like a beginner class, but if you stay patiently, when you get to liquidity, you understand one or two things about liquidity if you already know about market structure. So now that now brings me to difference between market structure and liquidity. I already explained it all here. If you follow the explanation, you will get it, you understand what I'm saying. But it now brings us to difference. I don't really like writing. My mates know that I do teach, but I just want to, I just feel like doing this today. Difference between market structure and liquidity. Difference between market structure and liquidity is that when we are I just want to give out some notes. Market difference between market structure and liquidity is 1.1. These are major points. Just have a jotter, jot down, and try to practice more. You will understand this thing I'm saying. So difference between market structure and liquidity is that one, market structure shows direction. I already explained this initially. If you are just joining the live, you're welcome. Shows direction, either uptrend, that is upward move. Okay, let me use upward move, what I explained. Upward move, which is also known as uptrend. Downward move, which is also known as downtrend, or ranging. That's just what market structure do. Market structure shows direction. And what liquidity do what? Liquidity shows targets. All these I'm giving out, these points I'm giving out, I'm still going to explain it more. Like, just pay more attention to the class. I believe you're going to gain a lot from this class. If you are just joining and find this class helpful so far, the little while you have been here, please double tap on your screen and like. So now, liquidity shows target in the sense that we know that if price take out an external range liquidity, it's coming to target an internal range liquidity, and if price take out an internal range liquidity, it's coming to do or target an external range liquidity. That's just what liquidity do. Again, what did market structure do? Market structure explain how price move. Explains this. I'm just giving you point. I've already do explanation initially, like a brief introduction initially. The market structure do what? Explain how price move, in the sense that when this market structure explain how price move is when you get to the advanced market structure, you will understand it. When you get to the advanced market structure, all this difference between market structure and liquidity, we see all of them when we get to advanced market structure. So what did liquidity do again? This is point 3. Point 4, liquidity explains why price move. You can see how everything is entering each other. Liquidity explains how price move, in the sense that you know that, okay, this price is moving up because it wants to go and do what? Take out an external range liquidity. And you know that, okay, this price is moving down. Maybe you are in an uptrend. You know that this down move that is happening is going to go what? Take out internal range liquidity. That's just it. So now, what did price do again? What did market structure do again? Let me just write market. Okay, let me use market structure. Market structure guides our buyers. So that's why when any strategy you should be using at all, you need to understand market structure. Market structure is like the basic foundation to any strategy you are using. If you are using ICT, SMC, Malaysian support and resistance, demand and supply, break and retest trend line, the major thing you need to understand is market structure. When you understand market structure and your liquidity, your strategy will always work for you, any strategy at all. But that's why you see some people will tell you SMC did not work. It's just because they don't understand market structure. It's not that SMC is not working. It's because they don't understand market structure and they don't understand liquidity very well. That's why they'll feel, okay, SMC structure is not working, this and this is not working. If you are just joining the live, please double tap on your screen, double tap on your screen to like. That's the only thing I just need from you guys. So points, I think that's the whole point. That's just the 5 points. So in one sentence, market structure tells you the trend and liquidity tells you where the market is going next. In one sentence, market structure tells you the trend Market structure tells you is that okay, I'm in a bullish trend, I'm in a bearish trend, I'm in a ranging trend. While liquidity in the market structure tells you where the market is heading to. Maybe the market has taken out an external range and is going to do or target internal range liquidity. That's just it. So that now moves us to difference. You see, this class is a very advanced class. I will be very sincere. This short class I'm going to do is a very advanced class that I can't probably meet it anywhere. I'm just joking, you can still meet it online, but the way I'll be explaining it is very different. Yeah. So now market, what is the difference? Don't worry, we are moving step by step. So just stay patiently on the live. What is the difference between, I'm sorry, I'll be writing short, between range, because my mentee know me, I don't like writing initial. I'll just be talking, and I believe you should be jotting down if you know you want to gain some important points. Between ranging markets and trending markets, you know, there is a clear difference between ranging market and trending markets. There is a very clear difference between ranging market and trending market. Hold on guys, just give me. So there is a major clear difference between ranging markets and trending markets. Is very different. So let me just highlight the points, the differences between ranging markets and trending markets, and I'll be doing some explanation here also again. Let's start from trending markets. Trending markets. Okay, one is that trending markets shows a clear direction. We already explained it before, so I don't think I need to write it. Trending market shows a clear move in one direction, like a clear move in one direction. What do we mean by that? Okay, let me write it down. Trending market shows a clear move in one direction. Okay, let me explain what I mean by trending market shows a clear move in one direction. You know that when you are moving up like this, market creates liquidity like this, take them out, it breaks structure like this, it do something like this, take them out, break structure. It's giving you a clear direction to one particular path, and immediately you see market, all this we are still going to explain it out. I'm just doing like little explanation, and immediately you see market do what? Take out this level here and start doing something like this. Is doing what? It has already changed direction again to downward move. Everything we are going to explain it, but trending market, the first example is, the first point is that it shows a clear direction, it shows a clear move in one direction. So that brings us to 2. Point 2 is that we have, in a trending market, we have 2 types of market, which is uptrend and downtrend. If you find this live very helpful and you are finding it educative, please double tap on your screen. Please guys, I'm begging, double tap on your screen to like. So trending market also shows 2 things. Trending market just showed us 2 things. It shows us an uptrend and also a downtrend. And an uptrend is in this sense is, we already explained it. Market, if you are in an uptrend, market will be creating higher high and higher low, higher high and higher low. In an uptrend like this, let me just use the textbook version so that it won't confuse you. When market breaks structure to this upside, it creates an higher high, and when it gives us a breakup, like when it put down to the downside, it creates what? An higher low. This is what I mean. I hope you guys are finding this class educative. Actually, if you are a beginner and you are here, just count yourself very lucky, because this is exactly what they will teach you, about market structure. But when we get to liquidity, I'm sorry guys, when we get to liquidity, advanced trader that already know market structure, we understand more better on liquidity, because I just want to explain this market structure so that when I get to liquidity they won't be confused, right? So market, I said in an uptrend, market just do two things. In a trending market, I said market give you what? Two things: a clear uptrend and a clear downtrend. And in an uptrend, we have two major things. In an uptrend, we have higher high and higher low. That's how markets from higher high, higher low, higher high, higher low. And how do you know this is an higher high? Is any level you see that markets break to the upside like this is called a break of structure or a breakout. I call it breakout, I don't call it a break of structure. When you see markets give us a breakout like this to the upside, it's called what? An higher high. And the short pullback that happened before that breakout, the leg, this is the leg this is the leg. I'm taking my time to explain this, very simple. And meanwhile, I have it in mind. February 1, I'll be starting a free mentorship class that will be lasting for 1 month, a very comprehensive lesson from the very beginner to the very advanced that you need. 1 month class. So if you are willing to join the class, you can message me you can drop a message on my DM, tell me you want to join. I will definitely ask you some questions why you want to join the class or why you want to be a forex trader, so that it won't be as if I'm wasting my time. Because some people, because they did not pay for the class now, they won't take it serious. So I will ask you, and if you are able to pass the answer, or if I see a genuine reason for you wanting to be a forex trader, I will definitely add you to the group. And the group, I'm only accepting 150 people. Even if I only accept 100, if I feel like, but maximum 150 people. Once it's 150 people before February 1, I'm locking the group. Nobody can enter, and we'll be having the class for 1 month, and it may pass 1 month, just for you to understand it very much better. So when markets, okay, back to my class, when market breaks structure to this upside, it creates this higher high. That is how you know this higher high. And this higher high is also called what? An external range liquidity. Let me just start explaining it like that, because we are still going to get to external range liquidity. It's also called an external range what? Liquidity. And this leg that is inside this break of structure is what? Higher low. This leg here. If you find this class very helpful, please guys, like we are just 59 likes, which is not good enough. Please guys, help me to tap on this screen, tap on this screen to like, please guys. So this leg here that caused this break of structure to the upside here, this leg that caused this break of structure is called what? Higher low. And the higher low is called what? Internal what? Range liquidity. Internal what? Range liquidity. That's just what I can explain about uptrend, the higher high and higher low. I believe it's very simple and precise. I don't take your time on that. But if you are a newbie, I will advise you, stick on your charts, try to find this break of structure, higher high and higher low, so that you can flow with it. So same thing too for a downtrend. I won't be doing, okay, let me just do for a downtrend. This is not a class. Assuming this is a mentorship class, I will have given an assignment on that downtrend. You should go and spot it out. So it's the same thing for a downtrend. Market will do what? Break structure to the downside. And what two things markets do in the down, when market is breaking structure to the downside, is what? It creates a what? Lower low and higher low. This is a lower low, and this are what? Lower high. It creates a lower low and a lower high. Sorry guys, it creates a lower low and a lower high. When markets break this structure, the same thing I explained here, when markets break structure to the downside, like this is just a textbook version, and this is the simplest way to explain it to make you understand first as a beginner. So when markets break structure to this downside like this, is called what? Lower low, and it's called what? In this downtrend is called external range liquidity, and this level that price is breaking structure to this up part is called what? Internal what? Range liquidity. That's just what I can explain on that point. So let's go to point 3. Okay, I've already explained it here. Point 3 is price is breaking structure in one direction for a trend. Yeah, you can see breaking structure in one direction to a trend. It breaks structure to one direction to a trend. So that's just it about trending markets. That's everything you just need to know about trending markets. So that's just the difference, the two difference between in the trending market. So let's go to ranging market. Don't forget this topic here is what is the difference between ranging market and trending market. You want to know why this is called a ranging market, and you want to know why this is called a trending market. If you are just joining, you are welcome. Please guys, double tap on your screen. You can send me a rose if you have, but please double tap on your screen. I'm coming guys, I want to check my trade. I'm coming guys, we're still going to go back to the class here. I just want to check something. Okay, you can see actually I'm in this trade. Let me show you guys from 2 hours. So it will look as if this, I may literally, I'm a fan of, I don't post my result online because I believe my results are meant for me. But sometimes if I feel like doing a trade recap, I'll do recap of how I took that trade and post it. And I also do teachings, but on my page I don't post my result because I believe my results are meant for me. The profit I took are meant for me, and if I took loss is also meant for me. So I don't post my results, but I post my teaching, my knowledge, little knowledge I have. And if it's somebody that is serious, if you see that knowledge, you can emphasize on that knowledge and make that knowledge and you get it to your own. Forex is not a day thing. It's not something you establish. It's not because I'm explaining it for you very clear here now. You now believe that okay, you already know it. No, you still need time, maybe like 2 months to practice, forward test, back test those knowledge you have. And if you have a good mentor here within, and you're able, your mentor is able to teach you for the very long span, is able to teach maybe 1 month, 2 weeks, a week. Since he's able to teach and he has already delivered all the knowledge he has for you, what you are supposed to do is go and backtest on those knowledge. Once you backtest on those knowledge, you see that you'll be good. So that's just, I'm currently on this good trade, so I just went to check it out, how it's playing out. So let's go back to our teaching. I never lost right there like this. Sorry guys, I'm trying to look for where. Okay, this is where we are. So you are ready. If you are just joining the live, you are welcome. But try to watch the video if I post it, because I'm going to drop my, I don't know how to pin, but I should have pinned my YouTube page. Yeah, but if you need the YouTube, because I'll be dropping this live on this class on my YouTube channel, you can actually ask for the YouTube link, follow and watch it over and over again. So we already explained that on trending market. So let's go to ranging markets now. Ranging markets, please guys, don't get lost to know where we are. We are differentiating between ranging market and trending market, so know where we are. So ranging markets so the differentiation for ranging market is One, a ranging market is when price move sideways. One, price move sideways with no clear direction. That's for a ranging market. If you are just joining the live, you are welcome. Please guys, double tap on your screen for more likes, and if you have rows, please guys, you can drop a rose for me. I really appreciate it. So a ranging market is when price move sideways with no direction. This is what I mean by price move sideways. Let's say we have a particular resistance level here and we have a particular support level here. The type of trader I am, I trade Malaysian support and resistance, but in a different way. The way I do trade is I call it SLK, structure liquidity key level. So when you have a particular resistance support here, resistance here, and you have a particular support line here, and you see market doing this, moving up, down, up. Thank you, Mr. Michael, for reposting. Mr. Michael is one of my students. He's the one that reposts now. Miko, or his name I don't know how to pronounce it, so I'm sorry. So price moving in a particular direction like this, up, down, up, down. This is a what? A sideways movement. And some traders will tell you this is dangerous. It's true. If you did not have, it takes a lot of experience before you know how to trade within a ranging market. Me, as I did sometimes, I'm not yet good in the market. Like, I'm still just 1.5 years in this market, but the knowledge I have, I can bet it. Some traders that are like 2 years, 3 years in the market did not have it. So that's just it. So I'm still also struggling with this ranging market. Sometimes if I want to trade ranging market, it used to hit my stop loss, but sometimes it will go in my direction. I'm going to explain how I used to do it, and you can go and back test and look for some ranging market and back test them. Yeah, but ranging market do what? Move in a sideways direction, in a particular direction. It did not give you a clear direction. You just tap into a resistance level, come back to a support level, tap into a resistance level, come back to a support level. That's what ranging market do. Another thing is ranging market do what? Stocks between two levels. That's what I just explained now. Ranging, them just jot them down in case you did not get my explanation. At least you can get my jotting. So two is that ranging markets do what? Price stock between, everything is just the same English, between two levels. That's just what ranging markets do. So in a simple word and in a simple meaning, ranging market is when a price is trapped in a box. When price is trapped in a box like this is a box like this, is a what? Is a ranging market. And when price give you a directional momentum, that is up or down trend, that is a what? A ranging market. And a ranging market do what? Consist of break of structure or breakouts. Okay, I call it breakout. I don't call it break of structure. I call it breakouts. Consist of breakout. It breaks structure. And when it's breaking structure, means if you are in an uptrend, it break external structure, and the downtrend, it also break external structure to the downtrend. So that's what I can say about ranging and trending market. So that now brings us now to the topic I've been saying, advanced market structure. I bet this thing I'm explaining here, if a newbie see it, is something a newbie have been looking for. I cry from time that he has not seen somebody to it. Maybe because he did not have money to pay for mentorship. I know how it is when I wanted to pay for mentorship when I was still learning. And I'm still learning now. I'm still even paying for mentorship now because I feel there are some people that know better than me, and there are some people that have some knowledge. So I want to tap in from that their knowledge. It's not that I'm paying mentorship just to abandon my own strategy. No. I'm paying mentorship just to tap in from their own knowledge. So what I feel that they have that entice me, just to have it and add it to my own and make my own strategy what? Bigger. That's just how trading is. All these your big guys, these Abe Forex, Jeff Branson, Dapo Williams, all these big forex traders that are there, they are still also learning. They have people they are looking up to that but they won't tell you guys because they want to what? They want to actually collect money for mentorship from you guys. So they have somebody that they are still looking up to, that their strategy is more powerful than their own, and they will, if the person asks them to pay this so amount, they will pay. That's why they will also come to you. If you want to learn from them, they will ask you to pay. So that's just how for it. But they won't come outside to tell you that, oh, we are still learning this. They will just try to like make that knowledge they want to learn, and after them knowing it very well, they will add it to their strategy, and they may probably increase their fee of mentorship because they already add one knowledge to the one they have before. So if you are just joining, you are welcome. And if you are finding this live helpful, if it's educative, put on the comment section, yes, I'm finding it educative, I'm finding it educative. Please guys, type, I'm finding it educative. So now this everything we have explained now bring us to what? Advanced. We are going to use it inside what? Advanced market structure. Everything we have explained, the basic market structure we have explained. Now we are going to bring it to where? Our advanced market structure. If you are a newbie that are just joining this live, I congratulate you because you are inside a place that is going to help you. But if you need this video, I'm going to be posting it on my YouTube. You can DM me out on my YouTube channel. I will send it to you and you will join me and you will watch the video. So this now, the basic market structure we have been explaining before. The first lesson we start, I'll call that lesson 1, and is what? The basic market structure. So this now brings us to what? At everything, all those basic market structure now bring us to what? Advanced market structure. And what is advanced market structure? Me, when explaining, I like giving you what is the definition, so that it's not just be like I'm just going straight into the what is. But my student know me, I don't type like this, so I just feel like today I'll just be talking boo, and I believe you should be jotting down. If you are not jotting down, that I believe that's where people learn, is when your teacher is dictating or explaining his thing. If you are a good student, you'll be able to jot down 1 or 2 points that I feel it will help you out. If you are just joining, welcome, you are welcome. Just double tap on your screen, please guys, double tap on your screen, double tap. And if you are just joining, you already missed part 1 of this live, which is basic market structure. But this is the advanced one, so I believe you are still lucky to meet the advanced one. So what is advanced market structure? Advanced market structure is a deep, more detailed way of reading the price action by looking beyond basic high and low. That's just the simple explanation I'm going to give you. Advanced market structure is a deep way of reading the market structure, more than just looking at the break of structure, external, internal. No, that's just it. And what advanced market structure focus on again is advanced market structure focus on how institutional traders manipulate retailers by using them as a liquidity. That's just another simple way of advanced market structure. Another very, very simple way of advanced market structure is the way institutional trader, hedge funds, big guys in the market that has the big, large capital, manipulates you, lure you in to bring your money first, and they will use that your money as a liquidity to now push price in the measured direction. So again, advanced market structure helps traders that understand advanced market structure. It helps them to know the true intention behind a price movement. You know the true intention behind a price movement. If you are just joining the live, please double tap on your screen. I just have 63 likes here with all this knowledge I've been dropping. Please double tap on your screen, double tap on your screen. I know I'm not analyzing today, but this knowledge is more than just analyzing for you guys. This knowledge, you can go and watch the video over and over again and actually practice, and you know 1 or 2 things on your own. But if you want to watch this video over again, you can message me. You can drop a DM message on my DM, ask for my YouTube link. I'm going to, because I'll be dropping this on my YouTube, not on this TikTok. And I'm not sure if TikTok will be containing this large amount of volume of video, because I'm actually doing a recording for it. So advanced market structure help us to do what? Understand the true intention behind the price movement of the market. So in a simple basic way, advanced market structure is the professional level way of analyzing price movements with accuracy. So we are going to get there. We are going to get to the advanced market structure. I'm just giving you introduction, explanation of it. So this now brings us to, why is this called advanced market structure? Is that I'm telling that this, the way I'm teaching, is very different from how, because me I'm giving you basics, explanation, example, telling you why this is working differently between this and this. And I believe that's what you need to understand about trading. You need to, I don't know. So why is it called advanced market structure? Why is it called advanced market structure? I'll just be giving you points. Some people believe that advanced market structure is just about price. It's just about you knowing where the price action is going, like where the price is moving to, or where the price is heading to. Some people believe that's just what advanced market structure is. No, but advanced market structure go beyond that. Advanced market structure, why is this called advanced market structure? Is one, liquidity sweep. Liquidity sweep. And what is liquidity sweep? Liquidity sweep are where pending order is. Are that equal? So you know that some trader trade equal high and equal low. They are the level of equal high and equal low. The price will first come to take it out before moving in the direction. Liquidity sweep are where transactional liquidity are, and where structural liquidity are, where inducement liquidity are. All these things are still going to trash it out when we get to liquidity. That's just about liquidity. Two, hold on guys, please. Hello Ezekiel. Hello. Ó ti mo ti pa. Kò sí, ó sì lè dúró, mi ò ṣọ́, kò sí pépà, mi ò ní pépà, bí a máa print ẹ̀ tí bá dé lọ́la máa ra pépà. No lè má lọ mọ́, mi ò ní pépà tí máa fi print, mi ò dẹ̀ náwó tó wà lọ́wọ́ mi, owó mọ́tò ni. Mo náwó tó wà lọ́wọ́ mi, owó mọ́tò lè jọ́ láti bá dé ni máa print ẹ̀, wọ́n máa mú lọ síbi tó fẹ́ mú lẹ́gẹ̀ẹ́. Mo ń lọ ní 2:30, bọ́ mi ò náwó pépà tí máa fi print tó máa fi bá mi múṣẹ́ yẹn lọ padà wálé. Ó tí àti charge díẹ̀ mú máa bọ̀ náà, ó ti tó, ìyẹn náà máa gbé mi nínú mọ́tò. Ó ṣe. I'm sorry guys for that little interruption. I received some calls, so I just need to pick the call. I'm sorry for that little interruption. I hope you guys are still here. I'm sorry for that little disconnection of the live. I just received some calls. So now I'm explaining why is it called advanced market structure. Where is it? Why is it called advanced market structure? I said first, sweep of liquidity. Sweep of liquidity is one. That's why it's called advanced market structure. Two is BOS and BO, break of structure and breakouts. Again, that's why it's called market structure. Three is supply level of supply, where your point of, okay, let me just use 3 is called point of interest. So your point of interest can be, hey, my battery is low, I'll be ending this live soon. It seems I'll be stopping in this advanced market structure. I'll be stopping in this advanced market structure for now. So tomorrow you guys can join. We still have a lot to cover, but my 610 battery is low. I'll just do some little analysis, and if you want me to analyze a particular pair, you can drop it on the comment section so we analyze it together. So reason why this is called advanced market structure is sweep of liquidity, break of structure, breakout, and point of interest. And it's also called advanced market structure because big institutional traders, they do what? Manipulate retailers before delivering their price action. That's another thing why it's called advanced market structure. So, but I can't go further again because my system is low already, and where I am currently, I can't on the generator. So, but just let's stop at this advanced market structure. Everything, if you are a newbie and you are just joining this live, everything I've explained so far, you are just watching this video, everything I've explained so far, try to go and look it on your chat. And please, you can message me, ask for my YouTube, because I'll be dropping this on the YouTube. Ask for my YouTube link. I'm going to give you so that I can watch this video over and over again. This is part 1. We are still going to have part 2, part 3. I think so. Part 3 is when liquidities will come in. So now we are still going to talk about the types of structure. We have 2 types of structure, which is continuation structure and reversal structure. That was supposed to be our what? Our next class rather, but it will be our next life that will be entering. We'll be starting from continuation structure and reversal structure. From there, you now start to getting things more and more clear. From there, this continuation and reversal setup structure rather will take us towards market circle or ranging circle. So Mr. Michael is here and is my student. You know how I put effort when it comes to teaching you guys. I keep on asking, do you understand? But that one is when you join my February class. I'm having a February class, a free February class for 1 month, February 1st, the ending of February. This is something that is not very common in the industry, but I'm doing it. 1 month class for free from a very beginner to adult. With this little thing I'll teach you today, guys, now you know that if you join my class February, it's going to be a massive educative class. So a 1 month class from February to what? To February 1st to end of February, and it may pass February. So if you want to join the class, you can message me too you can drop a message, a DM, ask for the link, the Telegram link. But once it's 150 people or 100 people, I'll be closing the group, and I won't be accepting people again till we finish the class. And maybe next year or middle of the year, if I feel like doing another mentorship again, you can rejoin. So now since we already talk all about market structure and the rest, so let's do little analysis just to a takeout for this class. So let's start on this particular good I took, this particular good, the gold trade I am on particular. If you may not understand this, if you are a newbie, but don't panic, just stay patiently and watch it, because you are still going to get there. Actually, I started from the daily, very simple thing. If you join my live day before yesterday, I already explained how to use candlestick to build your bias from a higher time frame, but it will still be a part of what we are going to. I'm already doing class already. I've started teaching before February. So, but you just know that if you join February class, it will be more of banger. There are things I'm not saying yet. That is when you join the February class.